Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and earnings is on our focus right now. Well, India's largest bellwether in the information technology space, TCS, has reported its earnings for the quarter ended March 2023. Now, the company has reported the net profit increase of 5%, 11,390 crores versus 10,846 crores on a quarter-on-quarter basis. However, the EBIT margin missed the street estimates by 50 basis points, coming in at 24.5%. Now, the firm has reported its lowest revenue growth in constant currency terms in 11 quarters. The growth has come in at 0.6% on a quarter-on-quarter basis. Now, to discuss more on the earnings and the outlook going forward, I'm now joined by the top management of the firm. Mr. Ganapathy Subramaniam joins in. He's the COO at TCS. Welcome, sir, and thank you so much for taking the time out for this discussion. First up, if you could list out for all our viewers, has the 0.6% constant currency growth been lower than your own expectations? And why exactly has the growth been subdued this quarter? Is it the seasonality factor or anything beyond that as well?
Good morning, Sakshi, to you and your viewers, and thank you for having me here today. 0.6% sequential growth came in certainly lower than what we expected ourselves. We were expecting somewhere in the region of 1.5 to 2% as a quarterly growth as we stepped into the new year, right? To put it this way. But then especially towards middle of February and March, the banking crisis that happened, which kind of slowed down things a bit. Many of our customers felt that it's time to be a little cautious. Let's spend wisely. Well, God sick, the budget's all right for the year, but we don't know what's going to happen. So let's spend cautiously, and then wherever they could defer the projects, they could defer the projects. I want to again be clear that it's only a deferment, and we have not seen any large-scale cancellations or huge ramp downs per se. And it's just not primarily only in financial services, but North America, people have become a little cautious and tentative. We called out the softness in North America even in the last quarter, and hope that this will become better during the beginning of the year. But then, due to this crisis, financial services got into certain amount of caution. The auto industry got into some amount of caution. And there's some kind of effects. All this kind of slowed down our growth for the quarter.
Right. Mr. Subramaniam, like you pointed out, there has been negative sentiment due to a lot of factors globally. Have you really noticed a quantifiable impact on the client spends with respect to the financial crisis that has been brewing in the US starting February? Any deal cancellations, any delay in ramp-ups? And how long do you see the effects of the financial crisis really prolonging for you as a sector and as a company? How do you assess the likely impact going forward? Is it going to be restricted to BFSI or spill over to the other verticals as well?
Overall, I think I don't see fundamentally anything wrong in the technology sector, right? Especially in the IT services side. We have done about $10 billion worth of order bookings during the last quarter, and it's very broad-based across industries, across geographies. Okay, and these out of this $10 billion, $5 billion came in from North American clients. About $3 billion came in from banking financial services clients. $1.3 billion came in from retail consumer product services clients. So it's a very, very broad-based. The interesting thing about this order booking is also that a number of medium to large deals, $50 to $100 million deals were seen in that. Only one mega deal, as we call it, about $700 million worth of that. So if you look at all of this, I think the environment remains quite stable, and there is an optimism that we can get to execute all of this. Right? No issues per se. As I said, right. There are no large deal cancellations at all. Yeah.
Right. But would you say that, you've reported $10 billion worth of deals being won this quarter, with the number of large deals coming in at an all-time high? Now, that's commendable as well in these challenging times. But I wanted to understand, why is it really not reflecting in the top line? And going forward, the deal win pipeline that you've guided $7 to $9 billion, are you going to stick with that?
I think so. I think, my view is that, we got to execute well, right? Number one. Um, the deals that we have signed up, they're all kind of getting ramped up as we speak in the coming quarter. And then, these are deals which are typically should get completed between the next 12 to 18 months. So we should be able to pull revenues as we execute out of these $10 billion worth of deals that we have made in this quarter, right? Fundamentally, I don't see anything wrong, and
Okay.
we have to execute, and the supply side is easing up. We have built the capacity. Our utilization is about 80 to 83%. We are used to operating at about 88 to 90%. So the opportunity to improve the utilization, reduce the contingent labor that we have in the overseas markets, and bring in the optimization and use some of the newer capabilities in machine learning, artificial intelligence. All that means we should be able to grow with margins.
Right. Exactly. I wanted to come to margins as well, and to understand the key reasons for the margins missed this quarter. Has it come below your expectations? And because this has really come in despite the rupee benefit that we saw this quarter. Also, attrition for you is coming down. That again is good. And also the outlook on the margins going forward. When do we see the 26 to 28% kind of margins, the pre-pandemic margins that we used to see?
Margins came in at 24.5% in the quarter, which is a kind of a flat compared to the previous quarter, right? The way to look at it is that this comes on top of, yes, we had a currency benefit, all right. We also have significantly, replaced the contingent labor with our own employees. Yes, they have to travel from India and the other countries to the North America or Europe and wherever it is. So that it meant that there had been an increase in the on-site costs per se. So that kind of neutralized both, in that sense that it is the margin came in flat, right? This is due to the fact that the cost for the quarter has been quite kind of committed. But suddenly, the crisis happened in the later part of the quarter. Consequently, the revenue didn't come up, and that impacted the margins in a way. But the trajectory of the operating model change that we have to go through in terms of replacing the contingent labor, short-term labor that we have with our own employees, improving the utilization, means that margin should hold up and move nicely forward.
Okay. A little bit about the hiring and the attrition trends now. The net employee addition in FY23 for you has been 78% lower than FY22. I wanted to understand from you if there has been any delay in onboarding of the freshers in FY23, and also if you've honored all the offers in this financial year. And going forward in FY24, what are going to be the hiring trends looking like? What's the number you're looking to hire? And is there any change from what you expected to hire earlier?
No, I think customer centricity and employee empathy have been our two pillars on which we have built this business. So we are going to be honoring every single offer that we made in the last financial year. About 46,000 offers have been made, and typically, about 40,000 of them will join. And we are hoping to welcome each one of them into the TCS fold in the coming quarters as per our ramp-up plan, right? In fact, many of them joining dates have already been communicated, right? As far as the lateral hirings are concerned, I think we calibrate this on a quarterly basis for strong demand skills like cloud, artificial intelligence, etc., etc. If you have some good professionals available in the market, there's always some demand, so we keep hiring them. And ramping up our bench capacity. I think we have built enough capacity. We have the the task to improve the margins as well as improve the utilization. I think the lateral hiring is a function of the future demand that we see. But overall, we are in a good space with respect to the supply side and the capacity that we have, the skills that we have built, the order book that we have. And it's a question of execution in the next 2 quarters at least.
Okay. Everybody's been talking about these evolving technologies like AI and GPT of late. Are your clients also demanding for wider integration of these emerging technologies? What is going to be the focus of TCS on such technologies going forward? There are two parts to this question. If you are looking at AI as an emerging technology that would help reduce your need for any specific hires or jobs going forward in the future, I'm asking, and how significantly could this generative AI space really contribute to your own top line and margins in the future course?
I think generative AI is an interesting technology, and certainly I think it offers a lot of potential, no doubt about it. It can do many things very differently and has the opportunity to improve efficiency, productivity, as well as accelerate the adoption of technology, right? As I saw it, I think the innovation around it is surpassing productivity, right? That we typically get from our own employees due to learning curve and all the other aspects, right? Artificial intelligence is nothing new. I think, we have been at it since 1990, and it's just that it's fast maturing, and it has come to a stage where everyone will use it, right? You will use it, I will use it, my children will use it, right? So there is so much of ease that it brings, in terms of how technology can be adopted, even for your daily life, right? Yes. So that's the power of this particular technology. So it will certainly improve productivity for us. It will certainly change the way that we execute projects, the way that we collect requirements, the way that we design things, the way we develop software, test them, and then more than anything else, the code that we come up with is largely a proven code, right? But having said that, there are concerns around it, and a lot of governments and academia are working on it to alleviate those concerns. But our focus is to really see that whatever code we come up with, whether using generative AI or otherwise, how do we develop software that generates software? Number one. Second is that how do we leverage that proven code that we already have in our stable, right? We adopted this approach fairly, decades ago. For example, our own product, TCS Banks, 95% of the code of TCS Banks is completely generated based on a very high level of prompt that we do in terms of the higher level specifications that we write. So, it's nothing new in terms of the generative capability that is out there. But the AI around it and the generative AI around it has really, I would say, offers a lot more, ease of use. I put a lot more ease of use, a lot more, very quick to integrate things. So I think it's a very, very interesting technology.
But our jobs are going to be safe or no? That's the ultimate that, all the freshers in the IT space, they're going to be looking at an answer from you.
Yeah, I think jobs are going to be safer. If not, if at all, I think every new technology has only augmented the jobs, the way that people do. The quality of work that we all do will get better and better. And I think the demand for such technologies will only keep going up. So I would encourage each one of the persons out there to learn this technology and be ready. Right?
All right. Well, on that note, many thanks, Sasa, and for being with us and sharing with us all these insights. All the very best to you for the coming quarters, and we shall continue to get more insights into the world of IT and the earnings outlook going forward as well. Many thanks.
If you like the video, do like, comment, share, and subscribe.